Hello everyone. Last Friday, Indian market had its worst sell-off in the last 30 days, and on top of that, Friday night Nasdaq down over 400 points. As a consequence, now today Nifty expects to open further down. So in today's video, first we can see what intensified the sell-off on Friday in Indian market, and in addition, we can discuss our regular pre-market report for today, 9th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. On the last pre-market video, we discussed this. On Thursday night, though US market didn't fall drastically, the global momentum was deteriorated, and also we discussed about the negativity about banking stocks. So in line with that, Nifty opened 50 points gap down, then the selling started to accelerate and finally closed around 300 points down, which most of us know now. One important thing which we didn't discuss was regarding the Goldman Sachs report. On Friday early morning, Goldman Sachs downgraded bunch of stocks, SBI, Indus Towers and Vodafone Idea, etc. In addition, they downgraded the whole public sector banks and stated that the risk-reward ratio on the sector is not at all favorable. And also, they explained the return of assets on the public sector banks, particularly on the SBI, is peaked now. And after this, they are expecting a slowdown, so they cut the FY 2026 earnings estimate, which in turn pushed down the whole PSU banking sector down by 3.5%. And in fact, in a way, their report was structured like pressing the panic button. In my last pre-market video and in my weekend video, some of the viewers asked my views about SBI. For those, I strongly recommend to read this Goldman Sachs view on SBI. Again, don't take the Goldman Sachs view also very seriously. It's really about the individual risk tolerance. And according to me, SBI is the only major bank which got the healthy credit to deposit ratio around 75%. Honestly, I don't understand how Goldman Sachs is mentioning that SBI's credit growth rate will slow down kind of. But as I said, it's just my opinion. I can be wrong. So anyway, because of Goldman Sachs downgrade, SBI and Indus Towers stock price last Friday down around 4%, whereas Vodafone Idea was down by 11%. On the other hand, they upgraded the buy rating to SBI cards, which in turn made them to close positive on Friday. Hence, the takeaway is, until some serious positive influencing info towards the public sector banks, we can expect some weakness to continue. Then regarding institution, on NSE data and NSDL data, FI was net sellers. As per NSE data, the net sold for 620 crore rupees, and as per NSDL, the net sold for 900 crore rupees. Whereas on the other hand, DI was net buyers. DI net bought for 2120 crore rupees. Here, one more thing. In the weekend, I did saw some of the claims that Friday's sell-off was due to the SEBI's FPI declaration rules by September 9th, kind of. Just for info, it's not new. I already made the video about it on the January month itself. I will attach that in the pinned comment, both SEBI circular and my video. Now about all these rules, it's not new. Market already knows that for over a year period. Again, the Friday's FI gross purchase and gross sales value was in line with the any average day trade value, like around 15,000 to 16,000 crore rupees each. So I don't think SEBI rules is triggering the sell-off. If anybody think different, please let me know in the comment section. That's all about the Friday's Indian market. Now coming to the US market. Before their market opening, more jobs related data was released. The official government non-farm payroll addition for the August month came as 1,42,000, which was less than the analyst expected 1,62,000. So again, it's not good macro data, but compared to July month, it's okay. On the other hand, the hourly wages compared to July month increased by 0.4%, higher than both expected and the July month value. Again, this is also not good since this will increase the inflation further. So whatever macro release on Friday night was also not good. Hence, US market again had a sell-off. Dow Jones down by 1.01%, S&P 500 decreased 1.73%, whereas Nasdaq is the one that got affected by most, down by 2.55%. In case of VIX, increased by 12% and moved near to 22.5 from below 20. Hence, the global momentum is not at all good. In line with that, on Saturday morning, Gift Nifty fell further down to 24,773, equating it with the spot market. For now, it's indicating the gap down of 120 to 160 points. Regarding Indian ADR, as it is, everything was down. ICICI Bank ADR, Infosys ADR and Reliance GDR, these three down between 1.5 to 2%. Whereas HDFC Bank ADR and Wipro ADR down around 0.8%. And if we calculate the arbitrage difference, means it's not that bad. Reliance GDR was 0.3% negative indication. ICICI Bank, Infosys and HDFC Bank ADR, these indicating a negative arbitrage of 0.5 to 1%. On the other hand, Wipro ADR has the positive arbitrage. So overall, banks negative indication and IT mixed. Then about oil, again because of the bad jobs data, it further fell by around 2%. WTI crude closed around $68 per barrel and Brent crude closed at $71 per barrel. So these are the things happened in the global market. Now let's look at the new India specific info. First, during weekend, Geo Financial Services and BlackRock announced that they are forming an joint venture investment advisory services. Generally, this is considered as positive, but not sure how market will react to it. Let's see. Second, last Friday in the aftermarket hours, RBI released the bi-weekly credit and deposit growth data, and for the third time in a row, credit growth data comes around 13 to 14%, which was at least 3 to 6% lower compared to the last 1 year average. On the deposit growth rate side, it was steady 10% but not great. So clearly, Indian banks were not issuing the loan as they used to give like 6 weeks ago, which means less business and less revenue growth. Hence, no wonder in the last 6 weeks, Bank Nifty is underperforming Nifty. Here, one more thing. During weekend, HDFC Bank increased the short-term minimum lending rate. Hence, considering all, we can expect market to react for it. Third, regarding HUL, their management board decided to form an independent director to evaluate the prospects of new ice cream business. So HUL will be on focus today. Finally, in case of brokerage report wise, during weekend, Jefferies released a lot. Stock wise, Jefferies raised the Bajaj Finance target price by 15%. Then in sector wise, two-wheeler and defense sectors expect to grow around 14%. Whereas housing sector and tractor segment grew 10%. So Bajaj Finance and all these sectors will be on focus today. As a summary, global momentum deteriorated further. In line with that, Gift Nifty is indicating the gap down opening of above 100 points. However, there are some positives like two-wheeler and defense sector growth report by Jefferies, etc. Anyway, about the things to look out today. Just now, Japan's GDP data was released, which comes as 2.9% against expectation of 3.1%. So again, it's an additional negativity. Then before our market opening today, Chinese consumer inflation data is due. So we can expect Asian market to react for this both Japan and Chinese data and possibly might extend this influence on our market as well. Finally, in the night for US, New York Fed 1 year inflation expectation are some of the items we need to keep an eye out today. Coming to technical, as I said last Friday, Nifty opened 50 points gap down and closed at near 24,850 with above average volumes. Thus, on the daily chart, Nifty formed a long bearish candlestick pattern. In addition, Nifty closed below the 10 and 20-day exponential moving average with RSI and MACD momentum indicators all showing a negative crossover. Hence, we can expect the short-term trend to be negative. Here, 24,500 expects to act as the support, which coincides with the 50-day exponential moving average, while on the higher end, resistance is at 25,050. In case of Bank Nifty, it opened 270 points gap down and yet another day underperformed Nifty and closed at around 50,580. Thus, on the daily chart, Bank Nifty also formed a long bearish candlestick pattern. Similar to Nifty, Bank Nifty also down below 10 and 20-day exponential moving average, but in addition, it fell below 50-day exponential moving average and below the mid of the Bollinger Band with above average volume. Hence, the negativity around Bank Nifty is higher compared to Nifty in the short-term perspective. The immediate resistance might be at 50,800 to 50,950 with crucial support at 50,000 to 49,700. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,200 and 25,000 with maximum new call option rating at 25,000 strike and then 25,100 and 25,200. On the put side, the maximum open interest was at 24,000 strike, followed by 24,500 and 25,000 strike, with maximum new put option writing at 24,900 strike, followed by 24,000 and 24,800. Thus, from options data, 26,000 is the immediate resistance with support at 24,000 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.